The next piece on First Word is on Avenue Supermarts, which plans to add nearly 30 stores in FY20 and larger ones than that to help drive growth. In an analyst meet yesterday, the retail chain laid out its strategy that involves store expansion, changing product mix, and much more. Agam Vakil is standing by with the highlights. Agam, what stood out for you?
Well, among the most important factors, Neeraj, was the fact that they're being very tentative when it comes to its online business because it's a big cash burn business. But let me just start off by talking about their plans when it comes to store expansion. So, as we can see, the company has mentioned that they did add around 21 stores in FY19, and this was perhaps not as per their expectations, and they very well could be a little more aggressive going forward. And on the back of that, Prabhudas Leadadhar is projecting about an addition of around 20 stores in FY20 and about 30 stores in FY21. So we're most certainly likely to see the number much higher than what we have been used to as far as FY19 is concerned. Another very important factor that the company mentioned was the fact that the new stores that came into play in this particular year, the average size was around 46,000 square feet. Now here the management mentions that what they intend to do is to, if they do have larger stores, it will mean more throughput in the long term, and that is what they would be ideally be looking for. They are also increasing their realty acquisition, and they are only going to consider lease models if the leases are also in the long term. So of course all these factors are very much in play, keeping in mind not just the next few years, but much longer than that. Now, as far as your clusters are concerned, the northern cluster is relatively new, which is why there's been a little bit of slackness there. But when it comes to its mature clusters in the west and south India, they continue to do well. There's been a lot of pickup, and based on that, while the total store addition stands at 21, we've seen 8 stores being added in Maharashtra, 4 in Gujarat and Karnataka, and these are some of the bigger states where it has a relatively larger presence in. But moving on to your e-commerce, now the company has put in substantial amount of funds in DMart Ready. And while the revenues have risen by, they've almost tripled, if you can see, from 44 crores last year to 144 crores this time, the EBITDA loss has been relatively stable, so this of course can be taken as a positive, which means that the company is being relatively more responsible when it comes to investments in the e-commerce space right now as compared to, several other companies, if I can call it that. But when it comes to DMart's revenue shares, and this is something that the company is going to focus on, improving product mix, and within that product mix, foods, non-foods, which will however have FMCG items, and of course general merchandise. And as you can see, the highest share will be foods, because the company essentially majors in groceries, and of course general merchandise, which is the next in line in terms of revenue contribution. But moving on, this is Avenue Supermart's same-store sales growth. The company has suggested that they are relatively happy with the way same-store sales growth have panned out, essentially coming on the back of 14% last year. And there could very well be a little more improvement in stock, considering they're going steadily and they're not aggressive in expansion in their stores. As far as revenues go, again, this has been something which has been known. They are looking at very, very steady growth because they've been very careful in terms of expansion. And finally, coming down to your operating margins. Gross margins remain stable. They are also suggesting that for now, operating costs in their brick and mortar stores are much lower as compared to the e-commerce. And while we have seen margins come off from last year, they're still steady and much improved as well at around 8.2, and this will continue to be. They're not expecting any major changes in gross expansion. On the whole, a very stable and very measured outlook for the upcoming year, Neeraj.